Hey, this is Danielle. Welcome to Earnings in Focus Microsoft Edition. Now, I'm going to be talking about Microsoft today because it is reporting earnings after the bell, and I think it's also arguably the most important company to report earnings this week. I'm going to start off by saying that, I am bullish Microsoft stock. Microsoft stock is one of my top portfolio holdings. It just depends on, how the stock market's moving, which one is number one, but it's right up there near the top. So, disclaimer, I do love Microsoft. There's a couple reasons why I like Microsoft. I mean, number one, it has a fantastic trend. I think it's a market leader in its space. They really took the lead there several years ago by taking a software and making it a subscription business. Now, of course, anything and everything is a subscription business, right? So they were in the forefront there. They also have a fantastic cloud business. They got gaming. Now they also have AI. I mean, I think they have just endless applications due to their investment in OpenAI and the way that they can take those applications and apply them across their product lines. Ultimately, very bullish on the company. That's why it's one of my top portfolio holdings. Now, all that being said, when you take that into account and then you look at earnings this quarter, you're going to have a little bit different of a take, okay? Because I mean, I can look at the longer term patterns and I can show you, why I like the stock. I mean, first of all, this is a monthly chart pattern. This is a monthly squeeze. It's one of the most bullish signals out there. Essentially, you have this price pattern where you pulled back down into the 50 simple. You have this consolidation and then you have breakout, right? You also have volume that came down, hit a low, shifted, flipped to the upside. I will note that it's pretty overbought at this time. We've seen Microsoft stock be overbought though and keep going. So, it's one of those things to keep in mind, not necessarily the end of the road. And then when I throw a fib level on here, this is going to show you the longer term price targets in Microsoft, about 386, around 400, and then ultimately up to 433, about 450. Now, you might look at this and say, well, man, it's getting pretty close to those targets and it's getting pretty extended, which is absolutely true. So typically after a company has this massive move to the upside, it is going to stagnate for a while near those targets. So let's keep those longer term targets in mind, and then get down to the earnings report. Now sometimes what will happen is I'll say, hey, I'm super bullish on a company surrounding earnings, and then the earnings report will come out, they'll beat EPS estimates and it'll trade lower, and people will say, well, you said you were bullish on it, like how did that happen? I mean, yeah, that can absolutely happen. And just because a stock trades lower, immediately post earnings, it doesn't mean that the longer term case is now invalid, right? So when you're thinking about investing in Microsoft or trading Microsoft, it's going to be all about your time frame. So make sure you keep that time frame into account. I keep my investments separate from my trades, keep my options trades in one account, and then I have investments in other accounts, right? So that is where that difference comes in. Now, let me go ahead and show you the shorter term Microsoft patterns. When you're looking at the daily chart right here, you can see how it's pulled back over the course of the past couple days. We have a daily squeeze and we have volume that's starting to break out. So this is a pretty bullish pattern in and of itself. And when I throw on some fib analysis here, this is where it gets a little bit more exciting, because what I'm doing is I'm looking at the pullbacks that Microsoft has experienced over the course of the past, you know, I don't know, going all the way back down into here, which is November. You're really looking at this most recent trend and you're saying, okay, the stock has pulled back a few times. Let's measure these pullbacks and project it from this most recent high and say, if it does the same thing, where's going to be the buying point is what you're looking for. Now, you'll notice some of these pullbacks were pretty shallow. And so, you've already pulled back more than that in this case. So that's why those shallow pullbacks are not going to be a good point of analysis. So I'm going to use this one right here, this pullback projected from that high. see if I just try to use that one, I'm pretty sure. Yeah, so you see how it broke through? That means that we're not going to use that level, so I'm just going to click that one away. Here is another one, this high to this low right there. It's going to give us a level at 337. There's also a little bit of a higher high right here you could use. I think this one's already broken. Oh, nope, it's right there. This one right here. And can use that one from earnings. Okay, so what that is going to do is it's going to, compare, it is going to compare those previous pullbacks with what we're experiencing right now. And it's going to give you a bunch of different levels here that you can look at for support. Now, the way that it works is, you need a level to be hit, held, tested, and for the price to trade higher for you to get a trigger for an upside buy. Now, in this instance, it did slightly break through this 344 level just with a wick. So I'm going to leave it on. But we have a level right here at 343, another level at 340, 337, and then downwards at 330. Okay. If you look at the lower time frame charts, that's where you can really start to see it's starting to hook around. And 15-30 minute chart is where you can really start to see the colors of the candles shift, and you can start to see that buying coming in. Now obviously this can all change when earnings comes out, so let's go ahead and look at some earnings analysis on this ticker. Looking at the earnings hot zone, this is going to be my earnings tool. Basically, what it does is it takes all the data from the time frame that I'm looking at. In this instance, it's 12 quarters, and it's going to crunch that data and tell me what the stock historically does. Now, people look at this and they say, "Oh my God, there's so much on that chart." Well, just break it down one at a time. Number one, we have these bubbles on here. These are the gaps that Microsoft has experienced over earnings. So what I'm doing is I'm looking for, does it normally trade higher? Does it normally trade lower? You can see on this chart, we have 1, 2, 3, 4 times that this stock has actually traded lower post earnings. Now, because I put a little bit of extra data here, so I had enough room to draw my fib levels, I'm not quite getting the 12th quarter, which occurred right here, but you can see that, earnings was right there and we had a gap up and it traded higher. So that's why we're not seeing the bubble on that quarter right there. So if you're looking at 12 quarters, you can see that 4 out of those 12 quarters, it traded lower, which tells me immediately my bias is to the upside. Because if you're just looking at statistics, what's the likelihood that it's going to go higher versus lower? These ones were also, kind of like at the lows of the bear market. So I would take that into consideration as well. Now, when you're looking at the gaps, you also want to look at what percent it normally moves by, because it's going to help you when you're trying to make a trade. So in this instance, we have a $17.50 move being priced in by the market makers. That is going to be approximately 5% based off of the current price of the stock. So essentially what the options market makers are saying is that if it moves 5% up or down, it's a completely normal move. That's also how your options can get crushed if you're planning on a 5% move. Now, you'll see that there are some times it moves outside of that expected range. You say, okay, well, how many times would it have moved outside of that range? Well, definitely last quarter. There's a quarter down here too, the lows of the bear market, quarter here. So essentially what that tells me, and this one was probably more than 5% also. So what that tells me is, you have 1, 2, 3, again, 4 out of 12 quarters where Microsoft has moved outside of the expected move. So that tells you as an options trader, like if you're going to make a trade based on probabilities of it staying within the range, um, 8 out of the last 12 quarters, it stayed within this move. Okay. Now, you also want to take into consideration what has it done recently, right? Well, last quarter, they had not only just a beat, but they also had a breakaway gap. This is a very bullish setup right here. When you have, a 7.7% gap, moves by $21, and then you have continual buying. Now, I really like this setup, and this is one of the main reasons why I was buying Microsoft for some options trades going into the report. I ended up taking those off when it hit the new high up here, scaling out on the way up. Um, and so I guess right in this moment, I'm just a little conflicted because I love the stock. I think it has a really bullish price pattern here. I love the squeeze. I love the support zones. I think also the market maker expected move of 17 bucks. You're sitting right at 348. So if you throw on another fib level here and look at your target, um, it's going to take you like right up into these zones, right? And those are my upside targets. So let's say, you get a move that's right at the expected range. It's going to take you right up into 365. Let's say you get a move that's about 1.5 times what's expected. That's going to take you up into the full fib extension. So I do like those upside targets. I think the flip side of this is okay, we know you're bullish Microsoft. We got that. Well, what about the flavor of the season? Okay. Flavor of the season is that we had companies last week reporting and crushing their EPS estimates, gapping down and rolling. So, that is something that you have to take into consideration because, just look at Netflix, look at Tesla, like Netflix, they were estimated to earn $2.82 and they made 329 and it rolled over. Lockheed Martin, they were estimated to earn 642. They actually made 663 and initially gapped higher, but then rolled over. We have Taiwan Semiconductor that they were estimated to make $1.07. They made $1.14, gapped lower and rolled over. So I can sit here and I can tell you that, I think Microsoft I think they're gonna beat EPS estimates. They beat 10 out of the last 12 quarters. The thing here though is it going to be exciting enough for this stock to continue the breakout that they have already had? You have to remember that they just made a new all-time high. They just had this, huge high volume move up. So sometimes what can happen, and what happened last week was, companies come out and they beat and it just kind of fizzles and doesn't really do a whole lot of anything. So that's something that I do want to keep in mind. But at the end of the day, this is a very bullish pattern. And I don't think I'm going to be able to help myself putting on some trades here. So normally what I do with Microsoft, you can do some neutral earnings trades, and you can say, hey, you just showed me that like 8 out of 12 quarters, this thing is going to move less than the expected move. We have an implied volatility of 73% here. So you're trading right at 350. If you come in here and let's see if we do some iron condors, what's that going to look like? I'm just going to price it out for one contract. So we do something neutral, $15 wide iron condor. You're getting 1137. No, wait, I need to do that wider. Let's see, let's do $20 wide. Okay, so $20 wide iron condor, giving you 1366. Honestly, credit not that much better than the other one was. You have a very good risk to reward, better than one to make two. You're risking $635 a contract for max of 1365. In these kind of trades, I target like 30% overnight. So just calculate like what's 30% of the credit, buy back the next day on the vol crush, as long as Microsoft stays within this range. Essentially, you just need Microsoft to stay within a $13-14 range to get your vol crush overnight. If it goes outside of that range, you have a max loss of up to $635. These shares that I have here are actually from one time where I got assigned, and I forgot to mention that in the video that I made last week is um, most of the times I've got assigned recently, like it's actually been more in my benefit. The Tesla trade from last week was not, but these shares I just held on to after I got assigned. I don't know. I'd have to go back and look when that was exactly. Whenever Microsoft was trading at 285, it was, yeah, it must have been last quarter. So last quarter, Microsoft had this big gap, and that would have been one of the one of the quarters that the neutral trade didn't work. So I ended up getting assigned on the shares, and worked out fine because I made more money afterwards just selling off the shares. Anyways, back to this original idea. So, as I mentioned, last quarter, the Condor didn't work. If you want to try it this quarter, based on the idea that the stock has already moved and the move may be priced in, this is something that I would look at personally. If you want to look at the idea that, hey, this is a bullish stock, we think it's going higher. In that instance, put credit spreads are certainly an option. Looking at like selling the 350s, buying back the 345s for protection, just pricing it out one contract. This is something that when my account was smaller and I was only trading, like trying to make $50 to $100 a day, this is something that I used to do all the time because you can make your spreads even smaller and you can make your risk like $100. So that is certainly a possibility. Now, if you say, hey, you are crazy, this thing is not going higher, it already had a huge move, in that instance, you can look at Vol Crush by selling the calls. You can sell the 350s, buy the 352 50s. Again, you can make this however big based off of the kind of risk that you're looking to put on. So, those are the options with Microsoft. The other thing you can do is just not trade it at all. You can say, hey, companies fell on earnings last week after beats. I'm just not really comfortable coming in and trading it before the report in spite of this like very bullish pattern right here. And let me see if I can buy it after the report. If you want to do that, I've already outlined, where the levels are. You have a support zone here around 343. You have another one down here at 340, 336, and 329. Out of those levels, I would say this one is probably the best. Right around 335, 336. You can see all of the support that's right here. Price has been trading around that area for a while. It's right at the 34 EMA. It's also a perfect expected move. So let's say, Microsoft does in fact fall this $17 tomorrow. If it does that, you're going to be right around this zone, and that would actually be a perfect spot to get in with this daily squeeze for some upside. Anytime you can get pullback, that's going to give you a better edge in your trading. So I mean, honestly, I almost prefer that scenario where we see a pullback and then we're able to get into this thing and, ride the trend to the upside. So those are all the options that I'm looking at. I will note that Microsoft also historically trades higher post earnings. These screens on this tool, the third one is going to be the post earnings move. So you can see that, there was a red quarter right here at the low of the bear market. But for the most part, these are all green. That's because Microsoft, like almost always, trades higher after earnings. So, waiting until the earnings report is over and then trying to look for an opportunity. You can certainly do that. Obviously, if it, explodes to a new high, then you can't do that, right? So it's just all about looking at the probabilities, looking at the kind of risk you're comfortable with. For me personally, when I first started trading, I never traded earnings. But now, I really like taking advantage of the unique facets of options. And when you have a situation where you have a rise in implied volatility throughout the quarter, it provides an opportunity to sell premium. So whether or not you want to take the neutral side of the trade because you think it's going to stay within the expected move, or you just like the risk to reward, or you say, hey, you know what, I'm really bullish, I'm going to take the bull side of this, or you say, I'm bearish, I think you're crazy, this thing's going lower, I'm going to sell the calls. Any of those are premium selling opportunities. So it just depends on what your take is, what the risk that you're comfortable with is, and just how you want to take this trade. So the other side of this is obviously just buying long-term shares. So I have shares in my other account. I have some here in my trading account, and I'm going to keep this long-term Microsoft investment for a long time. It is getting a little extended. It's up near these new highs, so I'm not really buying new shares here. But I'm going to keep riding this thing for many years to come. So if you have any other questions, if you like the video, if you have any comments, definitely let me know below. That will help me making future videos so that I know what to focus on, what people like, what people don't like, and I will be happy to make more videos for you. So thank you very much. Hope you enjoyed this, and I will see you in the next one.